Kamal Baheti, who is the CFO of Mcleod Rusell, joins us on the line from Hong Kong with a quick perspective on where tea prices are expected to move from here. Mr. Baheti, thanks very much for taking out the time. Prices in Kenya fell in the recent auction. What's your outlook on tea prices in India then?
No, tea prices actually, this is the end of the season in India. We hardly have any crop to be sold now. It is only the new season tea prices which will matter. Current prices are holding on in what it was there in the last year, same period. We expect opening prices to be much higher because October to December the crop was lower. There is a dent in the inventory in India. So we expect opening prices sometime in March, April for the new season tea to be much higher.
Prices are expected to go up by about 10 rupees per kg in the new season. What kind of price revision are you looking at?
It is basically we sell through the auctions and privately, and we expect a 15-20 rupee increase in the opening prices. But how the prices will fare out throughout the year depends on how the overall crop situation both in India and in Africa had been. Africa, we believe that there had been some problem in Kenya recently because there had been some crop hit area, and the expectation of the crop recovery which they lost last year, now it looks like they may not be able to recover. And we expect both Indian prices and the international prices to harden in the coming months, and particularly from the new season tea in the March-April month.
There was, of course, a wage hike in West Bengal by about 34%. There were talks of increasing wages in Assam as well. Could you tell us by when would we see that coming and what would be the impact of that?
No, in fact, the percentage increase when we look at in isolation in West Bengal looks higher, but it is an agreement which has happened for the period of 3 years. So on an average, it comes to around 10% per annum. Assam agreement is due to be renegotiated in October 2013, and we see what happens by then. There will be some upward revision, but this is the normal revision which happens. It may have a little higher increase in the first year, but very difficult to really talk about in the current situation unless we actually talk about it when the agreement becomes due.
Yeah, since labor accounts for almost 60% of your total production cost, tell us how much of an impact would these wage hikes really have on the bottom line?
Looking at the dynamics of the overall demand supply, and if you really look at last 5 years, where there had been a cost increase not only in wages but in other accounts, the price increase has been much more on that account. So in 2007, 11% operating margin, we are at 28% now. And we believe that going forward, whatever the cost increase on the wage hike, etc. are there, we should be able to really pass on and get higher prices. Because there is no increase in the crop happening both in India and across the globe. So yes, currently there may be in the initial year, there may be cost increase a little higher than the normal increase, but I think price increase should take care of that.
Okay, since you did mention that there is no production in the March quarter usually, tell us a bit about the current inventory position. Are you able to meet the demand requirements?
In fact, inventory positions have come down a lot. If we really put it together, there is 100 million kg which has actually gone down in inventory. There had been downsizing of the inventory, but since it is a seasonal industry, any further downsizing of inventory will be difficult. And that is why we believe with stagnant production and consumption growth, and the shortage getting created further, there will be a spurt on the prices. When it happens, how much it happens is very difficult to really put the number. But I think going forward for a couple of years, it looks very strong from the fundamentals point of view of the industry.
All right, Mr. Baheti.